They didn't pass a law. They changed a number. Overnight, your borrowing costs rise, funds stop buying your stock, your bank gets nervous, and nobody can point to a single vote. They call it ESG. I call it the control score. If it feels like a conspiracy, it's because the truth is organized like one. ESG, or control, the score that decides who gets capital. ESG started as risk housekeeping, E for environmental exposures, S for social and labor issues, G for governance and boards. Then came the scores. Scores became indexes. Indexes became trillions of dollars in automated fund flows. That's the trick. You don't need to ban a company when you can price it out of existence. Score up. Borrowing costs drop. Index weight rises. Passive money buys you without asking questions. Score down. Spreads widen, your weight shrinks, and sometimes you quietly disappear. Is that a conspiracy? No, it's plumbing. But plumbing decides which neighborhoods get water. Here's what almost no one says out loud. The number isn't handed down from a mountain, it's built by an industry. First, ratings vendors scrape disclosures, track controversies, run models, and output a score. Second, index providers take those scores and decide who gets included, who gets excluded, and how much weight everyone gets. Third, asset managers launch funds that promise to track those indexes using your pension, your 401k, and your savings. Change the model. Change the index. Change the money. And you never saw a vote. One multinational company scores high with one rater and low with another. Why? One model rewards polished paperwork. Another punishes the underlying product risk. Nothing changed in the real world, only the formula. So which one is the truth, and which one is leverage? You don't need Congress when you control policy memos. Pension committees add ESG language to their mandates. Banks update reputational risk guides. Funds adopt indexes with exclusion lists and score thresholds. No hearings. No headlines. Just new rules. And the rules move money. Here's an example. A famous electric vehicle maker is dropped from a major ESG index after a methodology tweak and controversy weightings. Meanwhile, a traditional oil major remains because its governance processes and transition plans score well in that model. Is that hypocrisy? Or is it a reminder that referees write the rulebook, and sometimes the rulebook prefers process over outcome? Then you have greenwashing probes. Regulators investigate big sustainable funds for overstated claims. Some pay fines. Others change names. When a score becomes a sales tool, the temptation becomes story first, substance later. If responsibility turns into marketing inventory, ask yourself, who's the customer, the planet, or the fee stream? Capital doesn't just move, it's pushed. On the debt side, companies issue green bonds or take sustainability-linked loans. Hit a target, keep your rate. Miss it, your interest steps up. On the equity side, raise your ESG score and your index weight can rise, which means passive funds buy more of you by default, no questions asked. Banks and insurers use similar models to nudge underwriting and limits for controversial sectors. No law required, just models. Here's a case file of premiums and exits. Insurers raise premiums or exit entire regions based on climate risk models. That's not an ESG score per se, but it rhymes. Math that steers real prices for real people. When models price risk, the bill lands on your door. There are 3 cracks that make ESG feel less like virtue and more like leverage. First, opacity. Models are black boxes. Assumptions shift, scores jump, and livelihoods move. Companies learn to hire consultants instead of welders because the fastest way to lower your cost of capital is prettier paperwork. Second, concentration. A handful of index providers and mega managers steer most global passive flows. That's not a cabal, it's scale. But scale without sunlight looks like a lever. Third, collateral damage. The glossy giant with perfect slides and incremental change gets rewarded. The messy, expensive retrofit that actually reduces emissions struggles to get funding. The scoreboard decides the game, so who audits the scoreboard? The pushback is here. Some states try to ban ESG mandates. Others require them. Corporations are caught. Raise your score, but don't be political. Meanwhile, passive money keeps growing. Index rules harden into habit. And the score's power rises regardless of who wins the press conference. Here's the line I won't cross, and the question I won't ignore. Truth: ESG moves real money. Ratings feed indexes. Indexes feed flows. Flows change prices, spreads, and survival odds. Truth: models differ. Incentives exist. Greenwashing has happened. Truth: cost of capital absolutely shifts with policy and perception. The temptation is to claim every outcome is a plot. That's lazy. The better question is this: what kind of system concentrates soft power over capital allocation in hands you didn't elect, then calls it just a score? Maybe it isn't a cabal. Maybe it's coordination by spreadsheet. You're not helpless. You just need leverage. If you're an investor, know your benchmark, one line that decides most of what you own. Demand plain English methodology in full holdings. Mix passive with declared active or factor strategies so you aren't hostage to a single model. Don't buy products with goals you can't explain in one sentence. If you run a business, build a one-page fact sheet: emissions intensity, safety rates, board independence, supplier checks, real metrics, plainly stated. Tell your transition story with near-term targets anyone can verify. Ask lenders which thresholds matter before you're surprised. If you're a citizen, push for scoring that's auditable with clean conflict of interest rules. Support disclosure that's standardized and proportional, data that helps small and mid-sized firms, not just giants with PR armies. ESG began as a compass. Somewhere along the way, it became a gate. Scores aren't evil, but unaccountable scores are power. If one number decides who gets money, the question isn't what the number means. It's who it serves and whether you're allowed to change it. This is Money Unmasked. Money. Power. Control.